Hello, 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 everyone. Mike Arnold here, co-founder, Pat, trading partners, along with hopefully we'll be on tonight, Bob Iacchino. How is everyone doing? George is hoping everyone is wearing shorts. Trash Market, I miss Orange Man from Coco. Sashi has the Amazon numbers. The Amazon numbers were ugly. Hey, hey, Waka Waka. Gary sold this morning. Thank goodness. Apple, that was just as numbers were coming out as the countdown was going. Let's see. Hold on. I gotta bring Bob into the green room. Bring Bob into the green room. We'll get back to Apple in a second. Thank you for posting the results, though, Sashi. Good afternoon, Patrick. Uh, let's see. Why do you say Apple fake numbers? Oh, with that, you know what? If you like what we do here, subscribe. That's all I got to say. Ring the bell, hit the Mike and Bob button. And Bob is waiting. Hello, options 22. Get Shorty, not just a movie title. Well, thank you for that, P Dub. All right. Oh, George is already for the name for tomorrow. 5% Friday. Is that 5% up or 5% down for 5% Friday? I guess it depends on the PCE numbers. Robinhood and Tradeovate shut down before the close? Really? I didn't. Wow. I don't use either of them. I want confirmation of that. Not doubting his strategy, Freeman, but I want some confirmation on that. I like to double check things, especially for a live stream. With that, the one, the only, the person everybody's been waiting to see. Bob, you're
I'm
on.
here.
You're here.
I am here.
I
Trying to
can, I can hear you. We got a lot to
trying
cover,
to.
Bob.
What's that?
We got a lot to cover.
Let's get started. I'm trying to figure out if I can print something from Twitter, a thread that I saw on Twitter that I really like. Just a
Uh,
lot of economic indicators about how absolutely horrible the economy is starting to get.
but Bob.
Yeah.
Look, we had the advanced Q3 GDP growth at 2.6%. Everything's fine and dandy. Biden even talked about it. Don't look under the covers. Don't look under the covers. Don't you be a
Residential
Bob Downer.
construction.
What was that?
Residential construction down 26.4%. Export, import, so balance of trade, up 2.7%. So GDP is up 2.6%. Positive 2.7% of it comes from exports. A big chunk of that being crude oil sent from the Strategic Petroleum Reserve to some of the outside countries that bid on it. If you guys don't know the way that the SPR releases happen, it's an auction. And because we got rid of, and I'm glad we got rid of it, the laws that stop us from exporting crude oil directly. A few years back, I believe it was under Obama, and it was a good thing to get rid of because we had so much crude oil that we were pumping ourselves, and it helped us get. So crude oil is not, it's not fungible. There's different types, different levels of crude oil. There's light sweet, which is mostly what we get here, and then there's black tar, there's thick, there's heavy crude, there's all these different types of crude oil, and they're used for different things. The only crude that can be used for everything is the heavy crude. Excuse me. And like trying to turn heavy crude into jet fuel is just beyond costly, getting all the sulfur out of it, et cetera. So when we had all that light sweet back in the day when we were drilling, drill, baby, we were exchanging it for heavy when we needed heavy. So it wasn't all being sold, some was being exchanged. So we had to get rid of, the laws that stopped us from exporting crude oil, which were laws from the 70s. A good thing to do. But what that did was that opened up the auction process to all purchase of crude oil when the SPR is released. So when people talk about a big chunk of the SPR going to foreign buyers, yes, you can't blame the administration for that. There's nothing they can do about it. They can only release it. And theoretically, if they were releasing it into the open market, then it would still, if it were going to have any effect on prices, it would still have that effect because it's a global market. So anyway, a big part of the GDP number that we saw was crude oil exports from our SPR. So looking under the hood of GDP, not good at all, but but potentially good for equities in the short term. And it was that for the early part of the day because it continues to put a little bit of oomph, a little bit of strength behind the narrative that the Fed can step down the aggressive nature of rate hikes or even pause.
Bob, haven't you heard the old adage, you can export your way to prosperity?
I have not heard that. Did you call it an adage?
It's, well, I don't know, an adage? What is it? What's the word
Yeah,
I'm looking for? It's not an espresso.
adage.
Adage.
The word you're looking for is adage.
It's not an
Yeah, Waka Waka is
attache
saying
either.
70%. Waka Waka is saying 70% of oil is changed into products out of the rule. And basically, one is gasoline, two is distillates, and three is products. So you get, theoretically, it's not exact, but you get 3 gallons of products, 2 gallons of distillates, 1 gallon of gasoline. That's the 3-2-1 rule for a barrel of oil. So what Waka Waka is saying in there is correct.
All right, so we can't export our way to financial uh, goodness.
Basically, look, this GDP number is not reflective of domestic demand. It's not reflective of the domestic economy. It's not showing strength in the domestic economy. That's what it means.
Any other thoughts on any number that came out today?
Durable goods.
Okay.
Durable goods was horrible. So, an interesting part about when you looked at the GDP numbers, when you dialed it down and looked at the numbers behind the numbers, it implied that capital spending by companies was lower, and the durable goods number, X autos, X transportation, confirmed that capital spending, durable goods is washing machines and refrigerators, but it's also capital spending by corporations, and it's down. So that was economy positive for stocks if the Fed were to slow. But you have to remember that what you saw in the interest rate market today was more. So today looked like a flight to quality or a flight to safety to me in interest rates because the dollar was up. Interest rate futures contracts were up, yields were down. And while gold and silver didn't necessarily follow in this sort of flight to safety or flight to quality, it seemed to me to be a flight to the dollar, given some of the data we saw, because now the Fed could theoretically step down their rate hikes, and this could slowly accelerate the company could slowly accelerate the economy again. And you saw that in the recessionary fears coming back up, if that makes sense. I don't know if that made sense to everybody, but it seemed to me more to be a flight to get out of anything other than dollar denominated assets. And then you saw value outperform growth in the equity markets by quite a bit. Facebook having quite a lot to do with that. Meta, sorry. But values outperforming growth, which is also safety stocks, theoretically, right? A lot of people, we're not alone in this. A lot of people think that value is going to lead if we rally, and if we continue to rally, and that again is because of just the bad situation that tech is in. So that also feels like safety to me. Anyway,
I got some other questions.
well, yeah,
First off, yesterday, Bank of Canada only 50 basis points.
Yeah.
We got to touch on that. Get your thoughts because you weren't on yesterday.
Yep.
Also, we had rate hike ECB, right?
Yep. 75 basis points from the ECB.
Not unanimous.
Nope.
Uh, and your takes on that. So we got a couple things on that. Then any thoughts going into then we'll roll into any thoughts going in tomorrow with PCE.
All right. So let's go backwards, if you don't mind. I think PC is going to be weak. I really do. But let's go to the euro. If you want to put up a euro chart, Mike, the initial move in the euro was up and then it weakened, right? So if you like looked at the 30-minute chart right after the announcement, there was a little bit of a spike, but then it weakened, right? And it continued to weaken throughout the day. And I believe that was because the ECB didn't touch on quantitative, they didn't touch on the balance sheet really at all. They didn't say that they were going to reduce the balance sheet. So it ends up looking not as aggressive as maybe Christine Lagarde thought it was, okay, from that perspective. So I think that's what happened there. So the Fed, because they are shrinking the balance sheet, remains the more aggressive of the two central banks, which helps the dollar theoretically. So she did warn about wages. She said wages are likely to get stronger. And then she warned about future rate hikes. But given that it wasn't unanimous, it didn't really play. The market didn't really believe it. And then the Bank of Canada, who has led in terms of the aggressive nature of rate hikes, stepped down a little bit with the 50 basis points. The market was expecting, well, the majority of market participants were expecting 75, but 50 was not. It was not a crazy outcome. It was within the realm of what was expected. Just fewer people expected 50, or the probabilities were lower for 50. They were higher for 75 for the Bank of Canada. So I think because they led in the aggressive nature of rate hikes, I believe the market started to pretend as if that gives the Fed a reason to step down rate hikes, not this meeting. All of the volatility has been in the December meeting, right? When we look at the Fed Watch tool, the CME Fed Watch tool, all the volatility of probabilities has been in the December meeting. Now, we did go from 98% to 95% to 91% on the November meeting. Where are we at now? 92?
We're at, I'll tell you right now, which actually was sort of shocking to me. It's like, it, yeah, I'm just waiting. Come on. Well, so many people checking it that no, it's at 88%. Wow.
Wow, that's silly. They're going 75 in the November meeting.
Yeah, that's
It almost doesn't matter to me where PCE comes out. Core PCE, which is the one we should look at tomorrow, because I kind of glanced over that. Core PCE, in the last 6 releases of Core PCE, 4 of them were lower. Now, they were coming down from really high levels, but 4 of the 6 were lower. It was really the last one that bothered the Fed so much, that 4.9 year over year Core PCE and that 0.6 month over month. That bothered the Fed because it had ticked up after being down 4 of the last 5 reads. And then it ticked up. And not only did it tick up, but it was the highest level of the previous 3 reads. So I think that's what we want to watch tomorrow. And the expectation for the year over year is 5.2. I'm not prepared to say that the base effects or what the effect of the base effect is on that particular number. But I think we'll see the core month over month somewhere around 0.3 or 0.4, which will be quite a relief, but will not, in my opinion, take the Fed off of 75 basis points at the November meeting. I don't think it'll do that. I think you'll start to see probabilities for 25 basis points in December rise if that's the case.
all
And then
right.
really, in my opinion, all that does, Mikey, is it pushes the next rate hikes out, because we'll take Australia as an example. So Australia led in stepping down the aggressive nature of rate hikes. They were one of the first, they were the first central bank to pull back. They didn't reduce rates, they just stopped raising rates. And here we are, probably 2 months after they did that, and now all of a sudden they're back, their inflation is back up, peaking again. And that could happen here as well, depending on how wages go. And we've all seen commodities go lower. We're all seeing the data slow down, but you still could get little spikes. I mean, look at crude oil is a good example, right? Crude oil, has not been rallying to the moon or anything. But when you look at where crude oil was, hell, just in September, it was down in the 70s, and we're back up above 85 today. So things can turn around pretty quick on the commodity side. And we already know that services inflation is going to be sticky and healthcare inflation is going to be sticky. So we got all those things to think about. So I think I covered all your stuff, didn't I?
Yeah, okay. Yes, you did. First off, before we got questions, but George with a super chat, thank you. That's some pudding. There we go.
Georgie Porgy Puddin'.
We'll review targets and everything. Nothing's changed on the bigger patterns just yet. Gary, thank you. Gary the golfer with the super sticker. Bob,
Thank
big
you,
shout out
Gary.
to George and Gary. Sterling. Bob, what are your thoughts on Rishi? Is it Sunak?
Sunak.
In the UK, from a purely economic, not political position, step in the right direction, wrong direction, or no difference? I can't talk.
So when you look at, okay, short term, it's a step in the right direction because the crisis has slowed in the UK. Long term, I don't think it's a good choice. First of all, in the key position, he was the only one left, right? Boris Johnson stepped out, and then the other person, I don't even remember her name, threw her hat in the ring, but at that point, it is what it is. But it's stabilizing the currency for now. It's stabilizing the gilts. Gilt yields still look a little higher, but it's stabilizing them. I think it's one of those things where, look, he kept most of the key cabinet positions from Liz Truss, including Hunt. Now, it would have been cool if he would have reappointed Kwasi Kwarteng. That would have been funny. But he kept Jeremy Hunt and he kept two other key people from the Truss cabinet. So obviously they had to go in their meeting and say, look, hang on to me, please. I didn't want to do that other stuff that Kwasi Kwarteng was going to do anyway. I thought it was interesting that he pushed back the announcement of the budget to November. I also thought it was smart because he pushed it back past the next Bank of England meeting to take the pressure off of them doing anything. That has the potential to backfire, but in the short term, it was smart. So I think it's more of a wait and see, Sterling. I really do. I think short term, it's a good decision because he was the one who lost to Liz Truss in the first place.
Okay. All right. So, based off, now we've had Amazon, which just got crushed after hours.
Wow.
Crushed. I mean, when I say crushed, it is funny because I was watching. Remember when we used to do some stuff with the binary options and the countdown to them was like, all right. Right before they were going to expire, you could have them flip. If they were at a key price, you could have them flipping because it's 1 or 0, right?
Right.
So I was going into the close with Amazon with 111.34 because the close below 111.34 was, all right, that puts the probabilities for a retest of the low area. So 2 or not below 111.34. And it just did close below 111.34, which tipped the probabilities using, how systematic I am.
Yeah.
I mean, it closed at 111.17, so just 17 cents below 111.34. So it's like, all right, we're going down, and or probably not guaranteed, but probabilities. And I know we bounced off like the next. I put those harmonics up this morning, right around this 90 level after hours. Now we're bouncing back a little, but that was some fun. I guess
So
fun's
my
not the right
E-Trade
word.
platform has it, E-Trade has it down almost 16% right now.
Yeah, it's down here. Well, it bounced out. My next harmonic was at 89.95. We got down to 88 and formed a double bottom. Horribly
Wow.
sloppy, but
Yeah, I've got a low of 87.59 in the aftermarket.
so we had that go down. Apple, where is it? I know they beat, and it was down earlier, but bouncing back
We're
a
about
bit.
33 right now, 33 basis points.
Apple's still holding that key 141.17. We're at 144.16, so that's out of the way. Now we've had some earnings like Meta was a disaster yesterday. Amazon was a disaster. Apple good. Uh, what are your thoughts now? What are your thoughts overall on some earnings that have come out from sort of a more macro? I don't need specifics on any one company, but more of a macro perspective, we have definitely have slowing down and a lot more misses in earnings. Does this change anything for the rest of this quarter from your viewpoint?
Not for the rest of this quarter. First of all, I was on Bloomberg yesterday. I told them that I wanted to be long Apple if it held 145 after earnings. So it's not doing that now, but I obviously am talking about tomorrow after the day session that I'd love to be long Apple around 145. Um, that's the only individual stock within the tech sector that interests me at all, simply because a lot of what Apple's doing is affecting other tech stocks, right? Especially your Metas and your Amazons with their advertising platforms. I suspect Amazon's going to have had a pretty tough advertising quarter, but who knows? That's what happened with Google, Alphabet, and to a certain degree with Meta. Alphabet also had, their cloud computing had a bigger loss than expected. I like Microsoft because even suffered, but it made 42 billion or something. I mean, it was still